That's the thing. The tools are already here. This isn't science fiction. The on-chain knob trade is totally possible today for anyone who understands this new landscape.
So unfortunately, it's not yet totally possible today, or at least if it is, I wasn't able to find either a money market or a perp stacks where I could get short the long end. Yes, you can buy or swap in to these, U.S. Treasury tokenized assets. You can own them. I wasn't able to find anywhere where I can get short these assets, these products. So once we can get short these US Treasury tokens, then we can start trading the yield curve more than just the NOB spread. We can trade the TUT spread or the FOB spread. So,
You just have to be willing to bridge that gap between holding a real, yield-bearing asset on one protocol and hedging it with a synthetic on another. So what's the next big evolution? It's something called cross-margining. Just imagine this. Instead of having your collateral sitting in one place and your trade in another, you could deposit your BEF token directly onto a platform like Hyperliquid and use it as collateral for your TLT short. Man, that would be a game changer.
that's what I want.
It would make these trades so much more capital efficient, bringing them a lot closer to what you see on Wall Street. So you can see it happening, right? These two financial worlds, TradFi and DeFi, they're converging. The bridge between them is being built right now as we speak. And really, the question isn't if these incredibly powerful new tools will be used at scale. The only question is, who's going to be the first to cross that bridge and make it happen?
That was a lot of fun for me just to go through with you guys. So let me just review one more time. So let's bring things on back to California and let's take a look at that infographic real quick. So the reason why I started with California is just the largest example of these transfer payments. These transfer payments cannot stop because all of these states, you got to ask yourself when you see governors talking about, hey, we're going to, give all of these social services to people that live in our states. How are you going to pay for that? How are you going to pay for these services to be delivered? The way that they pay for it is by using these transfer payments or by borrowing. These transfer payments, if they were to be turned off, I think many states, and I just looked at California, but I'd be willing to bet that it's many others also. I think many states are literally insolvent, like not even close, like insolvent by a lot. And so if these transfer payments were to stop, then the states, I think many of them would just collapse overnight. And so that's why these payments will not be allowed to stop. So if the payments are not allowed to stop, then the feds must continue borrowing. And that's why that fiscal deficit cannot shrink. It is structurally impossible for it to shrink unless the economy just goes into a massive AI-driven boom. So if those transfer payments can't stop and the deficit can't shrink, and the borrowing must actually accelerate, then rates have to go up. So if rates have to go up, then rather than betting on the direction of an individual instrument like the 10-year note or the 30-year bond, if you think, like I do, that the yield curve itself, the relationship between the 10-year note and the 30-year bond, the relationship between those yields, that yield curve, that part of the curve, if you think like I do, that part of the curve will get steeper this year because the long end rates will move higher faster than the short end rates, well, you can express that opinion by trading the NOB spread. So the moment that there are products available for us to be able to get short treasury assets, I'm going to be the first one executing this. And so that's why I want to bring you guys on over to Ostium right now, because this is a new perp stack, it's new for me anyway, that I just came across today as I was trying to find a protocol where I'd be able to get short treasuries. And I wasn't able to find one in DeFi. Ostium looks really interesting because look at these products that you can trade. I haven't found anywhere else where you can trade these. Look, this is the DAX, the German equities index in euro terms. There's nowhere else you can trade that, not in DeFi anyway. So this is pretty darn cool, right? You can trade the Dow Jones in US dollar terms. You can trade the FTSE, that's the British index, in pound terms. You can trade the Seng index in Hong Kong dollar terms. You can trade the Nikkei in yen and the S&P in dollars. So this is really, really cool. Okay, so let me just bring it on over here to TradingView. This is what the NOB spread looks like when you chart it. So I'm using Chicago Board of Trade futures contracts here, CBOT futures. And if I just go ahead and take a look at this, so it's 2.2 times CBOT ZN. So ZN is the 10-year note minus CBOT, and this is ZB. This is the 30-year bond. So remember that relationship, the ratio, is what creates that DVO1 that we're looking for. We want to get that DVO1 as equal as possible. So that means we need to be long more notes than we are short bonds. That's what creates that NOB spread. And so it doesn't have to be 2.2 to 1. It could be 5 to 2, something like that. But this is what it looks like when you graph it. And so this breakout that I see here starting to form, this breakout, I kind of expect this to continue. Okay, so that's what I had for you guys today. It's just amazing to me, the opportunities that are becoming available to us on chain. Let's just spend the last couple of minutes that we've got. If you guys have any questions, I'd love to answer them. But let's just take a look at maybe a couple of digital assets real quick. How about we start off with Bitcoin? So BTC on a weekly. What is this pattern? If I draw a flag here, this pattern is a bear flag. So a bear flag is a bearish continuation pattern. And depending on where you draw the top of the flagpole and the bottom of the flagpole, that will determine the target for this pattern. So if the target for this pattern it's what's called a measured move. So the distance from the top of the pole to the bottom of the pole subtracted from the bottom of the pole, it would, depending on where you draw the top of the pole, it would, it looks like it's saying, hey, you know what? Bitcoin has another leg down. That's what this looks like to me. It looks like BTC is going to have another leg down. That's just what I see from this pattern right here. Now, another reason why I think, Bitcoin could have another leg down is when I take a look at the S&P. So the S&P here, and I know that we get some announcement or something from the Supreme Court about tariffs tomorrow, but the S&P at what I think is some type of technical resistance. If we get some type of announcement from the Supreme Court tomorrow, well, it would make sense to me that the S&P sells off a little bit here, just a sell-off resistance, just like we did here at the end of 2021. I do think that a sell-off in the S&P ends up being buyable quite quickly. I don't think that there's any reason to believe that the S&P crashes or anything like that, because earnings growth for the largest S&P components, think those Mag 7 companies, earnings growth for those businesses continues to be in the double digits. So markets tend to not crash when earnings growth for their biggest components are still in the double digits. So I do think that, hey, you know what, maybe a little bit of a correction here, but then we probably continue up. Taking a look at the NASDAQ, a little bit of support here, and we're within a stone's throw of all-time highs. Maybe we put in some type of a double top, push a little bit higher. And then if we take a look real quick at gold and silver, so this is another reason to be structurally bullish on rates because of what we see happening to commodities. So gold, hey, it would not surprise me to see gold correct, but at the same time, I think that throughout the rest of this year, gold probably touches 5K at least. So I'm just going to go ahead and throw down a horizontal right there at roughly 5,000. So that would be just a big, round, important psychological number. If we take a look next at silver / so this is SI, and this is the weekly. If we zoom into a daily, silver, what is that? That's a double top. So if I go ahead and grab that horizontal, that is now resistance. So this is the breakout. We had that same type of double top here. After silver broke above 50, it put in this double top at right around 54. And after the second touch of that level of resistance, on the third touch, on the third test, it broke out. So this is now support. We've got resistance above at the double top, and we've got support below. So that support below is actually a long ways down. We're talking about 28% down. Now, is it likely that silver retraces all the way down to support at $54? Probably not. But let's take a look at a measure of momentum. What we see here, this is referred to as divergence, bearish divergence. Price is going up, but momentum has stalled out and is moving lower. So if silver breaks and starts accelerating to the downside, you could use an RSI like this one to help you time an entry. Because if silver actually starts to correct and RSI gets down to where, maybe a recent low was down around 40, if RSI gets to 40 and silver is trading at 68, 69, maybe that's an interesting entry. Yeah. And then if we take a look at some of these other metals like copper, you can actually trade copper futures in Ostium. So I'm pretty sure you can. If I bring it on over here to Ostium and we take a look at commodities, there it is, HG. So you can trade copper futures here on Ostium. Really, really cool perp stacks. I'm definitely going to be checking this out. Okay, so for tomorrow, this is what I want to get into. This piece of content right here, where Steepen TCG is talking about yields on gold and silver and levered stables. I'm going to go ahead and just take what he's already put together, all the protocols, and I'm going to perform my own research on all of them.